Here. We talked earlier. We had the forex update earlier as the new market session got going. You can see we've got a forex trade on presently over here that's working in our favor. And now we're going to pop over here to see what's going on in the futures market. What is going on in the futures market? Well, lots going on. Opportunity every day. Some days we have trades, some days we don't. Some days we have losing trades, some days we have winning trades. I mean, it is what it is. We've had a streak here, as the new year's gotten going, where we've had, a series of small wins. We haven't had any that really just moved, to that 2-3%, 2-3x of our initial entry, versus stop loss. We haven't had those big moves yet, but it's coming. We don't know when, we don't know where, but it's coming. And that's why we trade a basket as well, to ensure that we've got ample opportunity to capitalize when the opportunities do present themselves. So anyway, what we're looking at here, starting with the ES, starting with the S&P, we've got a long bias on the 4-hour. So we can see the 4 hours a long bias, but the 30 minutes flipped over on us. We've got a 30-minute has turned into a short bias. We talked yesterday about 3780 as being kind of a key area. Came down to that this morning, bounced off of it. At the top up here, we've got this 3805. That's a pretty key area of resistance as well. So got kind of a channel right now. This 3780 to 3805 is kind of a channel that we're in. Ultimately, we're not looking to do a whole lot with this. I mean, we're not playing the channel. We could, but that's a whole other discussion for another time. Looking at the BTX method, looking at breakout opportunities, we're simply looking for consistency in the direction of the market. So right now, we see that the S&P has a long bias on the 4-hour, but it's got a short bias in the 30 minutes. So that means we've got mixed biases. So if they're mixed, they're not in agreement, we don't do anything. We just put a big X on that one and we move on. So moving on, going over to oil, on oil chart here, which by the way, I don't know why my tongue is not keeping up with my brain. Talking about potential trade opportunities yesterday, the S&P did pull back, making lower highs and lower lows for us. But then on that, so we got some signals here. Hey, watch this candle. If we break back above this, we're looking to go long, right? Then we got another signal that said, hey, watch this. If we break back above here, let's go long. But then at that point, the market flipped over on us and we had a mixed bias. So then there's nothing to trade, right? So no trade there, even though, it looks like we've got some watches, some signals to watch. We never actually broke back up on that next candle. So now we're in a mixed bias again. It is feeling, the market's starting to feel a little top heavy, but that's not for your opinion or my opinion or anyone else's. We've got to trade with what the method tells us to trade if we're ever going to be consistent, right? So for right now, no trade on the S&P. Moving on to gold, on to crude. Crude here yesterday, we had some opportunities. The market pulled back on us, just like we're looking for lower highs, lower lows, lower highs, lower lows. It did break back above that previously closed lower high right here, and gave us an opportunity to lock in, a couple of ticks here. It didn't move. It came back and stopped us out, over here towards the end of the day before it finally moved on, unfortunately without us. But again, the entry method working very well, did lock in some profit for us here on gold, so potential opportunity there. Today, you're looking for the same thing. We've got a 4-hour bias that's long, very long 4-hour bias, and we've got a 30-minute bias that's long as well if we look here at the red and the green line. What we're watching for, same thing we saw yesterday. We'd like to see the market pull back, making lower highs and lower lows, and then we'll play a breakout of the previously closed lower high. And if it just starts falling and doesn't break out, then we're not in a trade. If it just takes off this morning without pulling back, we're not in a trade. There's no reason to force it. There's ample opportunity to be patient, wait, and let the trade setups work themselves out. Over on gold, we've got a long, the 4-hour is a short bias. The 30-minute here is also a short bias. So we'll be looking for short trades on gold. That's a hard one for me. I've mentioned this before and time again. I'm a little bit of a gold bug. I hate selling gold, but if it's there, you sell it, right? You take the opportunity and you sell it. So we'll be looking for, pushes higher where we've got a higher low and a higher high, and then we'll look to sell off the break back below that higher low if it does break back down. That's the plan there. Gold yesterday, we did have opportunity where we made that a little pullback here as the new session got started. We made a higher low and a higher high. It did break down below that and fill us in, and it moved for us, like taking off a lot of that initial risk, but ultimately did stop us out for a small potential loss here on gold yesterday. So anyway, we're looking for short opportunities on gold again today, looking for higher lows, higher highs, and then a breakdown back below that higher low. So if the market continues and pushes up this morning, obviously you'll get a cross here on the 30-minute, and then we would have conflicting market bias and we wouldn't do anything. So again, it all comes down to just following a plan, and that's going to give us that long-term expectancy that we need. Good plan, consistent execution of the plan, good money management behind it. Those things all add together to give you that long-term positive expectancy. And it doesn't have to be complicated. It can be a very simple plan, just like we've talked about here. You got to learn to walk before you can run, just like I said during the Forex piece. Everyone wants to just walk out of the gate learning how to trade and start hitting home runs. You got to learn how to walk first. Find a simple plan that you can execute consistently. Learn how to walk. Learn how to get consistent processes in place. Once you're good at that, then start moving up to the next level, the next level, the next level. But for right now, start here. This is a very simple method that you can use that will give you that long-term expectancy, of positive expectancy that you're looking for. All right, so that's